Thoughts on Bitcoin, its price escalation, and if and what impact that has on currency reserves, specifically the dollar's dominance as the reserve currency, if there is any correlation.
I'm a believer in Bitcoin. We've recommended it for our clients for more than 8 years because we do think it's an important asset to have exposure to. Our original recommendation was 1%. Today, for newer investors, I would recommend 2 to 5. The U.S. government itself is talking about making Bitcoin a strategic reserve asset. And I know there's some pushback for a couple of reasons. One is, Bitcoin is harder and less tangible relative to a hard asset like gold. In the U.S., holdings of gold is actually around $660 billion today. It's actually carried on the balance sheet at 1971 cost, so it's carried at $11 billion. But the U.S. has $660 billion worth of gold. Bitcoin is trading at 10% of the network asset value of gold today. So it's a $2 trillion asset versus gold at $20 trillion. So I would say if the U.S. was just trying to diversify its, currency holdings, they should own 60 billion incrementally of Bitcoin at least. But I think it's a very interesting question because I've heard a lot of people weigh in that if the U.S. starts to own Bitcoin as a reserve asset, that it would affect dollar dominance. The one thing I would just point out is that in the digital assets world, when we look at crypto pricing, the dollar is by a country mile a bigger reserve asset. Almost all the stable coins, I would say if you look at stablecoin dominance, it's 90% dollar. So in a digital native world, the dollar is more important than the euro, the renminbi, than the yen, the won. The only currency people really quote crypto assets in is USD. So I think if that's a proxy, dollar dominance would actually be bigger in a future Bitcoin world.
Bitcoin is gearing up for an unstoppable upward journey once it breaks past the mystical $106,000 barrier. As Bitcoin teeters at $90,000 or so, seemingly resting before another rise, traders and investors are abuzz with anticipation. Among them, banking giant Standard Chartered and Fundstrat's Tom Lee also contribute insights, suggesting a potential boom on the horizon. But what exactly is stirring the pot in this latest saga of Bitcoin brilliance? Welcome back to Investocracy Crypto.
New highs. Do you see any trouble there, or at least a moderation of the gains from recent years?
Well, I think it's understandable that technology could be consolidating some of the gains because the gains since October have been prodigious. I think it's been healthy because small caps, industrials, other sectors have started to lead. So I think it's a sign that the market is broadening. So I don't think technology valuations are at a bubble. I actually just think it's been healthy.
Really? So that is the half empty, half full viewpoint that either one that we've actually had people express earlier. Either, the generals could come back down to the soldiers or they could broaden out and the advance could continue. So do you think that this election year, 2024, will gains be similar to 2023, or was that was pretty rare and unlikely to be repeated this year?
It's a question clients are asking us. The stock market seems a lot stronger this year than last year. We've had 4 consecutive months of gains, which Mark Newton, our head of technical strategy, says is very rare. We already had a pretty nice January, a very strong February. To me, if the market gains 20% this year, which would match what it did in 2023, it wouldn't surprise me. But I think the character would be very different, that it would be a lot more sectors participating in. In some ways, I think if we are up 20% this year, I think small caps could be up a lot more, as much as 50%. So
we're not going to have a down year. That you're taking off the table, or what is it that would have to happen to throw this, your somewhat bullish or pretty bullish forecast in jeopardy? What would have to happen?
I think 2 things would probably derail an equity move of 20% this year, something even pushing the markets down. One would be if inflation reasserts itself in a way that the Fed has to reverse its action and become quite hawkish again. I think that would terrify markets. The second is if monetary policy is so restrictive now that we slip into a recession. I don't think we're losing that much economic momentum, but either would be negative for stocks.
As seasoned investors navigate this terrain, imagining it as a game of financial musical chairs might not be too far off the mark, except in this game, it's all about who grabs the Bitcoin before the music stops. Lucas confidently asserts that Bitcoin won't just bob up and down, but will soar once more, triggered by breaking the $106,000 milestone. Support for Lucas's statements comes partly from Bitcoin's recent performance. It's been playing a patient game, bound in a range after peaking at $110,000.
When Bitcoin was 4,000, it came down from 20,000, and you used to come on and say, yeah, by the end of the year, it's going back to 20,000. I don't know how you feel confident doing those things. Now, you've done it again, really, and with the, I don't know, what did you say by the end of next year? Where could it be in your view?
Well, I think that sometime in the next 12, 18 months, Bitcoin can be over 150,000. But that's because, the backdrop for Bitcoin is so much more favorable today. We've got more visible demand from the spot ETF. And we know the supply dynamic is improving with the halving coming up, which is less than a month away. It does help that the Fed is becoming dovish. I mean, that's easier monetary policy. And I think from a regulatory perspective, we had so many hammers dropped in the last 12 months, really 18 months, that unless it's going to be worse over the next 2 years, Bitcoin's already faced sort of the peak of regulatory backlash.
And it got through the old highs. We had a true Bitcoin bull on earlier saying that in previous instances where it has reached a new high, that it doubles fairly quickly after that. I mean, he said 18 days. The minute it hit a new high, it sold off almost $10,000 to 59, but it's back to 67 today. How long before it doubles again? I mean, could you see that in the near term, another doubling?
I mean, near term, it's hard to know near term. Joe, I know our digital strategist, Sean Farrell, said that it's typical to consolidate after making a new high. So he thinks for the next 9 or 10 days, we're going to be maybe chopping around here. But we saw it with the spot Bitcoin ETF inflows, like, BlackRock seeing almost 800 million in inflows. So I think as long as there's strong spot demand and there aren't eager sellers, you do have a market that's out of balance, that there's too much demand for Bitcoin, not enough supply created through the block reward.
Besides, it's not just Lucas with optimistic binoculars. Standard Chartered has made waves with their forecast of a possible ascent to $200,000. Such predictions add gravitas and excitement to an already bullish sentiment swirling around Bitcoin. Concurrently, Tom Lee from Fundstrat anticipates a correction preceding a strong upward trend, lending a more complex texture to the narrative. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Bitcoin, it was in the mid-50s to high 60s range. You said we're going to 100,000. I said, when are we getting to 100,000? You said by the end of the year. Okay.
Yeah.
So why did you say that? What did you see? And what do you see for Bitcoin over the next 6 months?
Part of the reason we have stayed constructive on Bitcoin is the price is following closely the prior halving cycles. The halving cycle, for your viewers, is when the block reward gets cut in half. That happened earlier this year. So there's a reduction in new supply. And the sweet spot of that price gain as supply is cut starts to happen towards the end of this year and then into next year. And I think that has supported why we expected Bitcoin to be 100,000. And over the next 12 months, I think something over 250,000 is possible. but maybe highly probable based on just this following this price cycle. The second reason I think Bitcoin has maybe more upside than that is because the new administration has run on a pro-Bitcoin platform. And I think that the possibility of the US not only legitimizing Bitcoin, but making it a strategic reserve asset, I think raises what would be the possible price scenarios for Bitcoin. Because if the US government, as they intend, ultimately gets to 1 million Bitcoin, they'll be the largest holder of Bitcoin in the world. And they'd exert enormous positive influence on legitimizing Bitcoin. And maybe I would just add to that, it's almost like taking a playbook from MicroStrategy, because MicroStrategy has proven that using Bitcoin as a balance sheet asset has really created a lot of value for MicroStrategy shareholders.
The current state of Bitcoin, holding tightly to its dominant position, paints a promising picture for keen investors. Imagine a world where Bitcoin surpasses expectations, not just scraping past $106,000, but catapulting beyond the $200,000 prediction. But what do you think? Share your thoughts. And finally, if you would like to know more about cryptocurrencies, or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.